Welcome to QAV episode 816, the 22nd of April. Back from Easter break, long weekend, market's back, crashed first thing this morning and then recovered. I think it's kind of back to where it was when it opened, but it's been it's kind of been a nothing week, really, on the market, Tony. The markets have been not doing too well, particularly in the US. Here, it's been kind of coasting along. But just more stories everywhere. Like, I can't find anything else in the financial media, really, apart from just, hold on, everything's going down.
Yeah.
Don't save the women and children first. Save the rich white men first, and women and children later if we've got time. The All Ords over the last week is actually up, surprisingly. The Dow Jones, not so much. The S&P 500, no, they're both down. Bitcoin is up. Apple is down. Google is down. Meta is way down. Microsoft's way down. Nvidia, Tesla, the Mag 7 are all way down in the last week, but the All Ords is up. What do you make of that, TK?
Australia's the best place in the world, Cam. That's what I make of it. We just
I think it's because Dutton's polling numbers have fallen down, and everyone's celebrating that. Dutton's whole thing about be a Trump light probably was badly timed.
no, he's been walking away from that, hasn't he? Didn't Jacinta, I forget now her name, Jacinta Price, yeah, came out and say make Australia great again, and they had to run for cover after she said it.
Oh, dear me. Yeah. So no, seriously, why do you think that our market's up when the US has been tumbling?
Yeah, it's a good question. Got to say that we're still like we were. Our commodities mainly go to China, not to the US. We're not a big exporter to the US. We're a net importer from the US, so tariffs are an issue. They're not going to be a huge deal for us.
Not a big issue for us directly, but indirectly, it's probably going to be a big issue for us, as I understand it.
Well, yeah, if America goes into recession, and there are some people saying it's already there, then I expect that we'll catch the cold when America sneezes as well.
And if China's exports to the US drop as a result of the tariffs, then China doesn't have as much money to buy stuff from us, et cetera, et cetera.
Et cetera, et cetera.
Trickle-down effects, yeah.
Yeah, but our market's down, getting up close to 10% on the basis of that news. I think the American market's down. I sent you a link to a story about it that came out from Bloomberg today, saying that the market was off 2.5% in the US overnight, and admittedly on light volume because it's Easter Monday over there when the market was trading. But the market was down 2.5% because Trump was supposedly asking around to see how he could sack Jerome Powell, the head of the Fed.
J-Pow, as they call him.
J-Pow?
Hey,
no, too late. Trump wants to sack him, or is trying to work out how to sack him, because I think it's pretty hard to do to sack a central bank governor. That's thrown the market into a tiz because there's not many things universally agreed to by economists, but one of them is that central banks should be independent. And, that's a lesson learned the hard way in a lot of countries in Africa when they let the government print money. Because that's the thing, like we had economists on our show back in COVID, and we talked about MMT, and we talked about the magic fairy dust that the RBA could sprinkle on the printing presses to magic paper money out of thin air. And that's the problem with the central bank, is if you let the government of the day run it, then they can just go into an election campaign, printing money like there's no tomorrow and handing it out. And that just leads to hyperinflation, which has been the case whenever it's happened.
And as I recall, with the MMT conversation, there were going to be no negative side effects of it whatsoever.
Yeah, correct. Except for the, whatever it was, $120 billion sitting on the RBA's balance sheet as a loss since they did it during COVID. Yeah. Which the government has to fund, by the way. Yeah. Yeah, no, well, that's the thing. And and that's exactly what's going to happen if Trump can sack Powell and take over the control of the central, or the Fed in the US, the central bank, and they start printing money because he wants interest rates to come down. then inflation will take off. It'll become hyperinflation. The currency will devalue.
He wants to be the head of the Kennedy Center and the head of the Fed, as well as
Ooh.
president and commander-in-chief. He wants all. It's like Pokemon. He wants to collect all the titles, all the roles, have them all. Why not?
Yeah, exactly.
So
So anyway, it'll be interesting to see what happens tonight in the US. They're in quarterly reporting season. I think, as we talked about before, Tesla are reporting. It's not supposed to be pretty. Few questions lined up about why Elon is spending so much time in the government and not running Tesla. Yeah.
It doesn't matter though, really, at the end of the day. Like I'm sure his power is pretty entrenched in Tesla. He's like, he's going to have voting class shares like Rupert if he doesn't just have the majority of the voting stock. So I don't know that it's going to matter too much if the shareholders are unhappy. What are they going to do? Vote him out?
Well, I thought you were going to say
I think so.
It doesn't really matter if he comes back to run Tesla on, because I think that's probably the more apt take on Tesla. Is it better off without him or better off with him? Look at the US government, for God's sake.
Yeah. Well, maybe he'll just go in and fire everyone at Tesla. He's good at that. It's just firing people, apparently. What comes next? We'll worry about that later. Doesn't matter. I've got these Trump supporters, or Trump's chumps, as I call them now, telling me what a great job Elon's doing with Doge. I'm like, listen, anyone can fire people. It doesn't take any sort of genius to come in and fire people. Anyone can fire people. That's the easiest thing to do. We've seen this in corporate land for decades, right? You'll get a new CEO comes in, fire everyone, let go everyone. All of a sudden, the business falls apart and they have to hire everyone back again.
Yeah. Correct.
Usually.
Oftentimes as consultants at a higher price.
At a higher price. That's what I was going to say. Yeah. Like, anyone can fire people. That's easy. And the analogy I've been using is when Stalin fired or gulagged or killed all of his generals in the late 1930s as part of the purge. Get rid of all the generals. We don't need the generals. Uh-oh, the Nazis invaded. Where are our generals? Well, you got rid of them all, sir. Oh, shit.
They've gone across to Germany.
Well, one did, but the rest were dead.
Valued.
Like, who could have seen that coming? Like, firing people and dismantling agencies. Like, I'm all for efficiency. Efficiency is great. But just arbitrarily firing 2/3 of your workforce and not thinking there aren't going to be consequences down the track is just ridiculous. But anyway, not my country.
And look, the sentiment's fine. I think any government can probably do with a bit of a dose of salts. They get fat and lazy like big book corporations do.
Yep.
But I've seen no evidence to say that Doge has trimmed the fat and not the muscle in the US.
Or
it's been fairly political too, I think.
Or has a plan for what we're cutting and why we're cutting it and how we're going to do better without that. It's just... And I like the fact it went from we're going to save $2 trillion a year to we're going to save $1 trillion a year to now it's down to $155 billion, I think. It's classic Musk reevaluation on the fly.
Reframe.
Anyway, back to the market. So I don't know. I've been, I don't want to get too buried in this, but there are stories. The Wall Street Journal, and this interests me, and I think I may have mentioned this last week. I know I certainly mentioned it on Facebook at some point. It's interesting to me when I see the Murdoch media starting to take shots at Trump's tariffs plan and administration. Because you kind of expect the Murdoch media to be in lockstep with the far right. But they don't seem to be. Wall Street Journal this week, who will pay the price for Trump's economic goals? Slash the trade deficit and the net inflow of foreign money dries up. This will hit share prices and raise the cost of borrowing for companies. Explaining what President Trump really wants has become a thriving industry in its own right, often proved wrong as soon as it is published. Two things are clear about his tariff policy, however. He wants a lower trade deficit and he wants investment to rebuild US manufacturing. True believers who think he might achieve those goals should think through what else has to happen as a result. The starting point is the balance of payments, the broadest measure of trade and investment in and out of the economy. Its two sides have to balance. The current account, which tallies up trade flows and some other stuff not worth getting into, and the capital and financial accounts, which measure, well, capital and money flowing in and out to buy things such as stocks and bonds and investments in factories. For years, Americans have imported way more than they exported, thus the trade deficit and the current account part of the equation. For the balance of payments to balance, there needs to be a corresponding inflow of capital. That has largely come from foreigners buying assets, most prominently stocks and government debt in the form of treasuries. Trump's plan will disrupt that dynamic. Smaller trade deficits mean smaller inflows of capital. And it goes on, but it basically just throws a big can of feces over the whole Trump's plan. He finishes, this is James McIntosh of the WSJ, I doubt that Trump's tariffs will bring much manufacturing back to America. If they do, investors and consumers will suffer. So, yeah, I mean,
I think that's a really valid point, Cam, is that if the jobs do come back to America, they're jobs Americans may not want.
Of course. I mean, yeah, everyone's been making that point
Selling
for
in
weeks.
sweatshops.
Yeah.
Yeah, working in car factories, welding, seat belts into seats. It's not. It left America for a reason. It's better. It's a non-critical job done by a non-critical employee, so it should be done by the cheapest employee. And B, if it comes back, it's probably going to be done by a robot, so it's not going to create employment. So
that was my point I was going to make. Yeah, I mean, it's probably going to be done by robots. And I actually do think we are heading towards a world where manufacturing does become actually hyper-local. I can see a world in a decade from now where there's a factory in every suburb that's just staffed full of robots, humanoid robots, that are producing stuff that your robot at home can't produce. So you have your local factory that's just community run or run by some sort of local organization that's just full of robots that's just churning out stuff on demand as you need. With a combination of nanofabricators and different fabricating machines and robots and all of this kind of stuff. And it does become hyperlocal. The vast majority of things don't need to be shipped from overseas, don't need to get made overseas because they can be made locally with, very, very cheap robot labor. But that's not going to happen quickly. That's a 10, 15, 20-year timeline,
Look, I don't doubt that. That's the Kurzweil projection, and he's been pretty accurate to date. Don't know what the timeline is on it, but it's going to happen. But the way things are going, you've just described the Chinese local robot. The American one's going to have 2 left feet. If it's the way America's going, their robots aren't going to compete with the Chinese unless they dramatically improve how they're managing things.
Yeah. But the most interesting point for me here is that, again, the financial elite over there, you saw when he announced the tariffs, all the heads of Wall Street, Jamie Dimon and who's the guy, Bill Ackman, all the big Trump supporters came out and were like, this is horrible, this is terrible, this is a disaster. As soon as Trump announced his 90-day pause, they were all back on the bandwagon. Brilliant strategy, Mr. President. Fantastic job. Who could have seen that coming? You're an absolute genius. They sort of showed fealty again very quickly, but they were ready to, smack him in the face for a couple of days there. The Murdoch media is still fairly negative towards him. I don't think Fox News is necessarily, but the print side of Fox is still fairly negative about the way Trump's managing the economy. So it'd be interesting to see how that plays out when his key support base, in terms of the guys with the money and the media, are not happy with the way he's running things. I saw another story I wanted to ask you about. The New York Times. There's a reason the world is a mess and it's not Trump. We've sort of talked about this a little bit in the past. You've been talking about this in some ways, I think, over years. And then we talked about Ray Dalio's analysis last week. But this is basically talking about there's a deeper force underlying today's disarray: economic stagnation. The world has experienced a long-term slowdown in growth rates that began in the 1970s, worsened after the 2008 global financial crisis, and shows no sign of improving. Stuck with low growth, waning productivity, and an aging workforce, the world economy is in a rut. This shared economic predicament lies behind the political and social conflicts the world over. The state of the Group of 20, a collection of the globe's biggest economies, tells us a lot about the world's economic health. The data is damning. 8 of them have grown by less than 10% since 2007, adjusted for inflation. An additional 4 are just above that bar. Some, such as India, Indonesia, and Turkey, have maintained stronger growth rates, but most are experiencing prolonged economic malaise. In the past, G20 economies regularly grew 2 to 3% per year, doubling incomes every 25 to 35 years. Today, many growth rates are 0.5 to 1%, meaning incomes now take 70 to 100 years to double. Too slow for people to feel progress in their lifetimes. The significance of that change cannot be overstated. Stagnation does not have to be absolute to collapse expectations. When people no longer assume their or their children's living standards will improve, trust in institutions erodes and discontent rises. And then it talks about the reasons behind it and deindustrialization. In America and Europe, we know what that looks like: lost manufacturing jobs amid declining demand for industrial goods. And then it talks about how it all moved to a services industry, and services, you don't get productivity gains like you do in manufacturing, etc., etc. So, look, I don't know much about this sort of stuff. Why is economic stagnation, productivity stagnation, such a bad thing, TK?
Why is it such a bad thing? Well, just for what you said before, there's been significant research which says that one of the core attributes of happiness in people's lives is the fact that they think they're doing better than they were 1 year ago, 2 years ago, 10 years ago, or whatever. That people don't feel satisfied or happy or contented if they're doing the same as they were 20 years ago or as their prior generations did. They want to see some progress in their life. So that's probably at the core of it. There are other things that come into play. If like one trading block is growing faster than the other ones, that's, then you start to have potential conflict because, the trading block that's growing faster, i.e. China, may well decide that, they're going to leave the rest of the world behind, and the rest of the world doesn't like that. And you get sort of, it starts off perhaps as trade wars, but then it gets into hot conflicts as well. So there can be all sorts of problems like that. But yeah, it's like that's, if you're not growing, you're standing still, I guess is the summary for it. Someone's going to cut your lunch eventually, but you're also going to feel like, you're never going to get ahead. You're not going to be able to afford to buy a house. If you do buy a house, you're going to be in one house, the same house for the rest of your life. Your kids aren't going to do any better, et cetera, et cetera. So, it's the end of the American dream, I guess is another way to put it. I guess in our lifetimes, Cam, we've had 2 productivity drivers. The big one was the internet. So if you look at productivity in corporate life, it really took us a quantum leap forward when you could start to digitize things, from just reducing bureaucracy and less clerical activity through to, disintermediating lots of businesses that were doing things, fairly slowly and unproductively, like taxis, like real estate ads, all that kind of stuff. So that was a big boon to productivity. That's kind of happened now, and we're not seeing step changes again on the back of that, but it doesn't say it won't happen again in the future. If we see big step changes due to AI or robotics or any of those kinds of things, we could go through another productivity cycle. The other tailwind that we've had in our generation is there's been a general decrease in interest rates. They probably got their lowest in the GFC, and then to the lowest again during COVID. We've had a headwind over the last few years because they had a quick rise. Now they're back to where they, it's still a fairly low rate, but we're on average over the years. So that's been a bit of a headwind for us. So it's hard to know what's cyclical and what's short term with all these things. And you never know what's around the corner that, Apple or Google or something like that could unveil an AI tomorrow, which just boosts productivity again across the globe. And we go through another productivity boost. But yeah, you could say, I think, Dalio was right, and as I said before, when we look at the sort of scenario planning at the macro level that Shell does on the long term, we're in an era of decoupling where countries are retreating back into themselves. We've come through a generation of intercoupling where we created trading blocks and trading partners and sold things overseas and were happy to run trade deficits, etc., because it was better off for our economies. And now, that's being reversed for whatever reasons, either because the US doesn't trust China, or the US is scared China's getting too big, or whatever. Or, there's actually downsides to, of course, that trading sort of interconnectedness, that if there ever is someone out there who won't trade with you and they hold some stuff that you need, then you've got to run around and try and find it from someone else. And if it only existed with that partner, you're stuffed. So, it's not a bad thing to keep some manufacturing level of skill going in your economy, even if it's not productive. Usually, the way that has happened in Australia traditionally is it gets government support rather than private support. You keep oil reserves in case you can't get oil from overseas. You keep food reserves. Not a big thing in Australia because we can probably feed ourselves, but countries will have to do that. So, yeah, we're kind of entering more into that era now, which is a low productive era, because if you can buy oil cheaper from overseas, but you're having to stockpile it here, which means if you do need to rely on that, it's going to be rationed, which means the price goes up. It's going to be a hit to the economy. So personally, I think that an interconnected world where everyone trades with the best producer for the lowest price is the best model. But it does expose you to, political risk, I guess, if the other side of the trading block decides to pull up stumps and not trade with you and you need them, then you've got issues. So we're kind of working through all those things in real time. It's just that we've got somebody who's not an economist leading the charge at the moment. Reminds me of that book, Confederacy of Dunces. I don't know if you've ever read that book. Yeah. The guy, the lead character in that, who was always blaming the rest of the world for his problems and was always thinking he was great, but kind of ran around causing mayhem wherever he went. It's the kind of style of things.
It's funny because I was thinking about that thing last night. Trump always portrays himself as a victim, and the United States as a victim. So, it's they're out to get me. They're attacking me. The Democrats are after me. Everyone's after him. Everyone's mean or rude or horrible towards him. Like he was, born with a silver spoon in his mouth.
Really true.
Born rich, born a billionaire, lived this life of, complete obscene levels of luxury and, making a big deal out of how luxurious his life was and how rich he was, very public about his ostentatiousness. But he's also the victim and everyone's out to get him and he's being attacked and America's being taken advantage of by the world. Poor America. It's this coexisting thing where he's the greatest and the smartest guy who's 6'3" and weighs 220 pounds, according to his medical examination last week.
And they said he had the highest scores ever on the test for
the cognitive ability,
Alzheimer's.
Cognitive
ability. Thanks. Yeah.
But at the same time, he's a victim, and everyone's out to get him. America's the greatest country on the planet, but at the same time, is being picked on by all these other countries. it built the World Trade Organization in order to maintain its economic hegemony around the world, and now it's trying to basically, throw a bomb underneath the World Trade Organization and prevent it. Do you know about how they've been blocking judges to the appellate court in the WTO for the last 8 years or so? I just was reading up on that over the last couple of days.
Yeah, trying to defund it basically as well.
Defunding it, and also just not allowing any judges. So if anyone gets, any trade issue dispute is taken up to the WTO rules against it, you just appeal it, but there's no judges in the appellate court, so it just goes into the void and nothing happens. And the US is, and this was under Trump initially, but then also under Biden, deliberately just not approving any appointees to the appellate court. So the WTO is basically just relatively toothless, and because it was because they were ruling against the US, and the US was like, okay, well, we can't have that. We can't have an international body that doesn't let us do what we want to do. So let's destroy it. So all of these international bodies, the WTO, the World Bank, the UN, NATO, the World Health Organization, that were largely established by the United States, are now being dismantled by the United States because they no longer serve their hegemony. There are now other major players that are taking advantage of these international bodies, and the US is trying to shut them down. It's fascinating.
It is, isn't it? Yeah, I agree. I think Trump's quite right when he thinks the world's out to get him. Based on the last 3 months, it's pretty hard to see why it would be out to get him. And his business career, I mean, he's had many bankruptcies. His style of doing business is not to pay the last invoice; it's to sue people. It's like, why wouldn't people be out to get him? I can see why he feels like a victim. As to why the US is a victim, I don't buy that at all.
No, it's the most powerful country in the history of the human race is not a victim, and particularly when they're accusing the institutions that they established as being mean towards them, and the whole thing about, China's selling us too much stuff. Well, that's because you outsourced all of your manufacturing to China deliberately, so they could sell you cheap stuff, and now you're complaining about the fact that they're selling you cheap stuff. I mean, it makes no sense at all. But anyway,
no, but it's also too. I mean, I think to be kind to the US government, Trump's trying to do things quickly before the midterms, which what he learnt from the first time round. He's got to get everything done before he faces a chance of losing control over everything, over every level of government. So he's running really hard and blowing things up. But, if you're an adult in the job and you didn't like the World Trade Organization, and this is as much a criticism of Biden as anybody else, just don't participate in it. Say, look, here are all the reasons we don't like this. Can we fix it? No. Okay. Well, sorry, we're not going to be a part of it anymore. Here are all the things we don't like about the UN. Can we fix it? No. Okay. Well, we're not going to play there anymore. Or here's our issue with China dumping whatever steel or whatever on our economy. We don't like that. So let's do a deal around it. Instead of, like the guy from Confederacy of Dunces sort of spinning around the room, knocking things over, saying everyone's out to get me, and it's the world that's at fault, not me, and blowing things up. Just fix the problems and get on with it.
Yeah, but the problem I have with that is, okay, so if they don't like the way the WTO is operating or ruling against them, well, you set it up that way. You established the rules that there had to be unanimous agreement on certain issues. That was how you set it up. To turn around now and go, well, we can't get any agreement, so it's invalid. Well, you set it up to be very, very democratic because you love democracy. You don't like the way the United Nations General Assembly votes against Israel or the United States. Well, you set it up to be a democratic world body. That was what you said you wanted. It's this whole rules-based order that they like to say that they support, but it's rules for
Yeah.
thee and not for me. When the rules, when the rules come back and bite you on the ass, you can't go, well, we don't like the rules anymore. We liked them when they worked in our favor. We don't like them when they work against us. It's just ridiculous. If you either want to have these democratic-based international bodies to work on the principle of, yeah, the world all needs to agree to something for it to be valid, and then if you don't like the fact that the rest of the countries, or enough of the countries around the world disagree with you, then tough titties. It means you're wrong. You either want democracy or you don't. Anyway, don't get me started.
Yeah. Look, I think there's an element of truth to that, but I also see the argument which says, hey, it's been around now for a long time and it's not working for us. Again, an adult would say, what do you want out of this that you're not getting? We want this out of it. We're not getting it. Let's do a deal to change it. I'll give you something that you want. You give me something that we want. We'll do a deal.
Yeah, it's diplomacy.
Instead of defunding the appellate court judges to shut it down. Why don't just be an adult and say we're going to shut it down?
As for the midterms, I don't think there are going to be any midterms, but we'll see. I might be wrong.
Yeah, quite possibly too.
What else you got?
Yeah, so what have I've got a pulled cork to do, but over Easter, a little bit more time to read, I guess. Something popped up on my social feeds, which I thought was really apt. Believe it or not, I get quotes on my social feeds from great literature from time to time, as well as all sorts of other things. Tarantino movie quotes and things like that too. But one popped up which it just resonated with me, and people will know the first line. They don't probably know the first paragraph, but I'll read it out. Just see if this resonates with you as well. It was the best of times. It was the worst of times. It was the age of wisdom. It was the age of foolishness. It was the epoch of belief. It was the epoch of incredulity. It was the season of light. It was the season of darkness. It was the spring of hope. It was the winter of despair. Which, of course, is the start of A Tale of Two Cities by Charles Dickens. It just resonated with me.
Written, 200 years ago?
Yeah, at the time of the French Revolution.
250 years ago. 60. So nothing changes. That's what you're saying?
Nothing changes, but doesn't that sort of just sum up how it is at the moment? Like we're on the edge of artificial intelligence. We're on the edge of potentially living forever. We're on the edge of, all sorts of medical and scientific breakthroughs every day. If you're looking for it, there's just such fascinating scientific information coming through all the time. And, then you got all the stuff that's going on in the economics in the world. It is really a tale of two cities, a tale of two worlds, really.
Well, yeah, I think it is, the sort of death knell of chapter 2 of the human race. I'm starting a thing I'm calling it chapter 3. It's where I'm trying to get together the brightest minds I can find to talk about how do we navigate this next transition from chapter 2 to chapter 3. And for me, chapter 1 is basically all of human history up till the Industrial Revolution. And chapter 2 was the Industrial Revolution through to today, through to what will be the AI robotics revolution, where humans are replaced as the dominant life form on the planet by the AI robot hybrids, whatever they are. That'll be chapter 3 for the human race. We don't really know what it's going to look like, what form it's going to take, but we do know it's going to be vastly different in inconceivable ways to everything that came before. And I think this is just the death knell of chapter 2 of the human race. We've sort of maxed out our social and economic cooperation, and it's all coming crashing down just in time to be replaced by the next thing that comes along. I was watching a YouTube the other day it was a conversation between Hugo de Garis and Ben Goertzel. I spoke at a Singularity conference in Melbourne about 10 years ago with Hugo de Garis. He's an AI researcher, Australian AI researcher, has been working in the field for 30 years and spent a lot of time in China working on Chinese AI projects. And Ben Goertzel, I think I had on the podcast 20 years ago. He's another decade. He'd been around AI research for decades. But they were talking about how do you align the AI with human values? And Goertzel had a good analogy. He was like, it's like saying, are humans aligned with squirrels in Yellowstone National Park's values? He said, like, we don't really care about the squirrels. We don't pay much attention to the squirrels. We find them amusing. We'll sit and watch them. We try not to hurt them. We try and leave them alone to do their thing. We think they're cute and funny to watch, but really our values aren't very aligned. Maybe we all want trees to still be around and we want there to be oxygen to breathe and that kind of thing. And we want them to have babies and have families. But really, our values, there's not a lot of there's no room for alignment. We're so vastly different to the squirrels that, there's no overlap really there. And he goes, that'll be the super intelligent AI in humans. Like, it's not going to be aligned to us. It's going to be a completely different form of intelligence,
We are bugs. Yeah, look, you could be right. I don't know. I'm just going to focus on optimizing where I am at the moment and making the best decisions around my investments and my life.
That's all you can do, right? People say to me, what a kid's got to do to prepare for this world in 10 years. I'm like, just do what seems to be the next sensible thing right now. Like,
correct.
It may not happen, but it looks like it's going to happen, correct, but it may not happen. So, and if it does happen, all bets are off. And if it doesn't happen, then the world as we've known it will continue for a while longer. So just, keep doing what you can do from day to day, I think, is all you can do.
Yeah. So back to stocks after our tour through the world's future and its problems. Bank of Queensland results came out in the last week or so. They're on a different reporting cycle.
Did you talk about them over dinner with your board member?
Well, she was a board member. She's not.
She's not
anymore.
Oh,
no.
When did that happen?
No, Jenny left the Bank of Queensland board when she went on to the board of Ingenia a few months, or 3 or 4 months ago, end of last year, maybe 6 months ago.
I don't think you updated me on that.
Yeah, she had a 3-year term.
Oh.
Yeah, she had a 3-year term on the Bank of Queensland and then came off rather than stand for re-election.
Oh.
Yeah, but we still have shares. I mean, she has shares, so I'll acknowledge that. And it was on our buy list last year. It's not there now. So I thought I could talk about it. Some people may still own them, but they've had a reasonable result. The headline from the Fin said that the Patrick Allaway, the boss, was going to stay in the role to see through a transformation he'd started. So he promises to be there for at least another 18 months. And the quote is, to see through a radical digital transformation of the regional lender designed to arrest a shrinking mortgage book and improve returns amid intense competition. Patrick Allaway has taken an axe to BOQ to reduce a bloated cost base and put it on a more sustainable foundation. Ooh, sounds like Doge. Taking an axe to costs. Over the past year, it has terminated a model where franchisees operated branches, cut branch numbers, sliced hundreds of jobs, pulled back the number of products, reduced the use of contractors and culled head office floor space. Over the last 18 months, we have seen what has probably been the most material compression in retail banking margins this industry has ever seen, Allaway said. As a small bank, the market disruption we have seen is exacerbated for us. We have said parts of our home lending book are not sustainable, and we will be recycling capital to higher returning segments of our book. And the article goes on to talk about the strategy of doing that, about how he wants to take money out of low-income mortgages, or certainly some parts of the mortgage book which are low income, and put it into more profitable parts of their business, which is basically business banking, particularly in the medical space and the agricultural space, which I think was something I talked about when I did the pulled pork on BOQ, that I think one of their strengths was the fact that they were Queensland-based, notionally still are, and they have a large rural and regional lending segment, which they kind of own, and they should be focusing on that. So yeah, that's BOQ.
Well, I'm POQ'd about BOQ. I sold them last year in 2 trenches, April and October, by the looks of it, when they were around about $6. And they're now at nearly 7 something. What are they? 7.20 this morning. Wow, they've done well. Bummer.
Yeah, done well. They've still got plenty of headwinds. I mean, they're doing a big digital transformation, which is never easy for a bank. Maybe CommBank has pulled it off, but certainly none of the other banks have been able to get off their, what they call the bank stack, the legacy IT systems, which were all built in the 80s and 90s, and move on to a more sort of digital-based IT platform. It's a very hard thing for them to do. It's kind of like building the racing car while it's running around the track still. So, or rebuilding the racing car while it's going around the track. So they've got that to accomplish, and they've also got the fact that one of their cost savings has come from dismantling their franchise business model. So they took on franchise partners in lots of regional and rural areas as bank co-owners, and now they offered to buy those people out. They want to take them back as company-operated branches, I guess perhaps to shut some of them down, but certainly to try and increase their share of the profit. And the people who are being bought out aren't happy, and they've taken legal action against it. So that's got to be resolved too. So, early days, there's some progress and some turnaround, but they're not there yet. So that's BOQ. And then I've got a pulled pork to do on Tribune Resources.
Oh.
If I can do that now?
Yeah, do that now, but don't say anything bad, because they're I just added them to the portfolio, I think, and
okay,
they're not far. Oh, they're okay. They're off their 3-point trend line. That's okay. Good. Off you go.
I won't say anything bad about them.
No,
it's pretty hard to find something bad to say about gold miners these days. They're the only bright spot in our portfolios. No points for guessing why gold's going up at the moment.
Yeah,
covered off on a lot of those reasons. But gold is having a very good run. It's having a very good day, as Richard Dreyfuss said in what's that movie? Let It Ride.
Okay.
Anyway, Tribune Resources, Perth-based gold miner, only a small ADT, so I hesitated to talk about them. They're doing 38,000 per day on average ADT, so only help small portfolios. Interesting thing about this company, Tribune, is it shares the same board as another company called RAND, code RND, which is at the bottom of our buy list as well. It kind of hovers on and off it. So I got a QAV score of 0.1 today when I did it. So I did think I could perhaps combine the two if you were looking at buying into them. But the ADT for RAND is even smaller. It's only about 3,000 a day. So I couldn't bang them together to get to a decent ADT size. But this will suit some people. I guess a lot of the comments I'll make, generally is that if you like a company like Tribune, you may want to look at some of the companies which have been on the buy list but are now off the buy list, largely because their prices have run up dramatically. Companies like Evolution, Northern Star Resources, they're still good companies scoring well on the quality metric. It's just the price is going up as we speak. And in fact, I did my analysis this morning before the market opened at a price of, what have I used, $5.06, I think. $5.04, and last time I looked before we came on the show, it was $5.16. So Tribune Resources share price is going up as we speak, as is all of the gold miners, really. I don't own shares in this one, but I do own shares in other gold mining stocks, but I won't touch on those today. What can I say about RND? About TBR. Yeah, thank you. It owns, or it actually participates, I guess is a better way of putting it, into three gold mining projects, at least two of which are JVs. The big one is one called East Kundana, which is outside of Kalgoorlie in Perth, a big gold mining area for decades in WA. It's in a JV with Rand Mining. Together with Tribune, they have the minor share of the JV, about 49%. The company that owns 51% is Northern Star, which we've just spoken about. Also, apart from having the same boards, Tribune owns 47% of Rand, so they do have cross-ownership there, which is one of the features of talking about this company. Seems like the principles have been around for a long time in the Perth mining scene, and there's a lot of legacy cross-ownership going on between various companies. Evolution owns a share of Tribune. Tribune owns a share of Rand. Northern Star owns 5% of R&D. So there's a lot of cross-ownership there. Some of it historically has been attempts to take over Tribune, which has been rebuffed in the past. Cross-ownerships in between Tribune and Rand I don't know if it's a case, but it is a defensive tactic, which is often used by companies to make it harder to take over one or the other because they own big slabs in each other. So you've got to take out both. Anyway, they own the money-making machine for them is East Kundana. Quoting from their website, Tribune is a participant in the East Kundana joint venture, which is 51% owned by Gilt Edge Mining, with Gilt Edge Mining now wholly owned by Northern Star Resources. Tribune and Rand share has remained constant over the life of the EKJV, that's the East Kundana JV. Ownership of GEM has passed through various mining companies, including Goldfields, Orion, Placerdome, Barrick, with Northern Star Resources assuming control of GEM and operational management of EKJV in 2014. The EKJV is presently an operational underground gold mining project located in the Kundana area, 25 kilometres west-northwest of Kalgoorlie and 47 kilometres northeast of Kilgardley in the eastern goldfields of Western Australia. The project comprises two producing underground mines. Raleigh is one of them, and the Rubicon/Hornet/Pegasus mine is the other. Prospecting and small-scale mining in the Kundana area commenced circa 1895. Modern mining commenced in 1988 with the development of several open pits in the area. Tribune Resources and its sister company Rand Mining held leases in the district from the early 1980s and formed an exploration joint venture with GEM in 1997. Exploration success saw the creation of an EKJV production joint venture agreement in 2002 to conduct development and mining of the resources in the area of the lease. Mineralisation occurred in 1999. The project continued. Other mines were discovered in the area in 2000. Open pit mining of Rubicon and Raleigh commenced in 2002 and was completed in 2004. Raleigh underground mining commenced in 2006 and at Rubicon Hornet in 2011 and is ongoing. So basically, this company was a gold prospector going back 30 or 40 years, struck a good mine, productionized it, went into a JV to do that, and has been producing gold from there. They've now gone out and looked for gold in a couple of other areas overseas, and there are other two projects. One's called Japa, Japa, and the Japa Gold Project is located in the western region of Ghana. So I've talked about Ghana before as being a gold prospect, gold mining area for other listed Australian gold miners. And it's near a fairly well-known gold area called Ashanti, or the Ashanti Belt, and people would have heard of the Ashanti Gold Mine Company if they followed gold mining in Australia for a while. Didn't look like that was in production from what I could tell. And then their other region of exploration is called Diwalal, if I pronounce that right. Diwalal, Diwalwal, and that's in Mindanao in the Philippines. And again, a joint venture which they have 40% interest in. And looks like what they've done there is to take over and to open up again what's called the Victory Tunnel. So a tunnel into a mine. They're getting that working again slowly, and they haven't, as far as I can tell, started production from there, but they may well in the future as they keep exploring and making that Victory Tunnel come back onto production again. So that's basically them. The jewel in the mine is obviously this JV they have going in Kalgoorlie. It's possible that they might strike it lucky again in Ghana and the Philippines and reproduce what they've got in Kalgoorlie. That hasn't happened yet, but they've certainly got a lot of prospects in those areas, I'll call them. A couple of other things to talk about with Tribune. It's buying back up to 10% of its shares on market this year, so that's something that we like to see. The financial results were very good. So revenue was up 44% from the first half of 2024. Income was up 73%. Profit was up 21%. Earnings per share in the last half was 36%, up from 21% in the first half. I think it's fair to say that it's possible that what this company is doing is sitting on a lot of gold resources in Kalgoorlie and then selling them into the market to cover their costs, basically, while they keep exploring. I might be being a little bit disingenuous to them, but that's kind of how I read this, because if you look at their numbers, even though profit was up, their PE ratio is quite high. So their earnings aren't great, even though their prop cap is 5 point something. So I'll go through the numbers in a minute. Basically, the sort of picture I'm painting is that they have lots of resources, and then they mine them and sell them as needed to cover costs, and they keep looking for more is kind of how I see this company, which is not a bad business model. And certainly, if you're trickling gold into a market as the gold price increases, it's a good time to be doing that.
Yeah.
One thing I saw when I was doing research, and I could only see it at one place, and the website was called Investor Insight, and it wasn't in any of their ASX announcements, which I found interesting. But there was a headline which reads, Tribune Resources and Ram Mining to sue Northern Star Resources, dated 23rd of December last year. And in a nutshell, it looks like Northern Star controls the processing of the ore that comes out of the JV in Kalgoorlie. And Tribune wasn't happy with the processing, either the priority of processing the gold, or that they were getting their share of the control of the processing, I guess, the order in which it was done. But anyway, that was the headline. I couldn't find anything else about it, so it's quite possible that they, lobbed the suit and it was settled straight away. But the context of all of this is that Northern Star tried to buy them out a few years ago, couldn't, was rebuffed, and they're kind of all existing in, kind of trouble in paradise sort of relationships. They're making lots of money. They've got people on their registers. There's cross ownerships. There might be a bit of argy-bargy going on in the JV that's not coming out. Anyway, that's all by the by. I think that's probably the history of a company like this, where you're always entering into JVs and you're pegging new tenements and discovering things and looking for partners, etc., etc. The company has an owner-founder, and he's been doing this for 30 years, so he certainly is part of the landscape and knows what he's doing in the Perth mining scene. So that's a tick, I think. If I go through the numbers, they're all very good. This company doesn't have a consensus target, so little broker coverage. I think probably the reason for that is the low ADT, even though the market caps, if you put these two companies together, is getting up around $400 million, you're not getting a large ADT because of all the people sitting on the register, either the owner-founder or the cross-holdings or the failed takeover attempts or the JV partners, etc., etc. So that's something to bear in mind. I guess, it's possible that there's going to be more corporate action with this company. I suspect that they have their price, and if the gold price keeps rising and it becomes attractive enough to start another takeover offer, they might eventually countenance one. But at the moment, they're making lots of numbers, lots of good profit. Their numbers are good. If I go through the QAV numbers, IV1 is only 42 cents because they have a small earnings per share. There's no IV2 because we don't have a forecast earnings per share from the brokerage community. What we do have is net equity per share, which is $5.46. So share price this morning was 504. It's now up around 516. But either way, we're buying it for less than book value, and certainly less than book plus 30%. So that kind of backs up what I'm saying. This company has lots of resources, and I think is probably selling gold as it needs to cover its costs, and therefore not making a lot of money. Yield, they pay a 20-cent per share dividend. Yield is up around 4%. Nice, but not scoring high enough for us. Stock Doctor financial health is strong, and the trend is steady. Stockopedia quality ranking is 99 out of 100, which is very good. The F score is 8 out of 9, again, very good. And the overall ranking is 95. So it's up there in terms of Stockopedia's ranking. As I said before, not making much at the earnings per share line. PE is high, but not the highest. So it's certainly been higher in the past, but currently sitting at around 61 times. So very high PE ratio. Again, I think it's because they're sitting on assets and only selling them when they need to cover their costs. Prop cap, however, for this company is only 5.6 times, which is why we put it on our buy list, because we can buy it with strong cash flows. Directors hold 33% of stock, primarily through a chap by the name of Anthony Billis, sometimes known as Anton Billis, owner founder with more than 30 years in the industry, both with Rand and with Tribune. Tribune, in terms of manually entered data, doesn't have consistently increasing equity, but a lot of the other metrics look good. Overall, the quality score from a QAV perspective is 85%, 11 out of 13, so kind of mirroring what Stockopedia says and Stock Doctor. And the QAV score is 0.15, so it's kind of in the middle of our buy list, but not doing too bad. Most of the other gold miners on the buy list have left because of price increases. Tribune is just starting to get there. Rand, its sister company with the same board, is just below its buy price when I had a look on the bread later today when I was doing research. So that will be coming into a buy. But again, there's very little ADT for Rand. To assess its risks and opportunities, obviously the gold price is having a huge upturn at the moment. That's got to be a tailwind for us. They are operating overseas for two of their major projects. So there's sovereign risk, which we've heard about before with government regime changes in Africa in particular. There's also JV risk, whether or not they sued Northern Star over the processing of their ore and whether they're getting a fair share. There's got to be a risk in not being the major partner over their ore-producing asset. But, they've had many decades to manage those risks, so they're good at it. Possible tailwind is the possibility of another takeover offer. And a negative is, even combined with R&D, this is a very low ADT stock, so it's not going to suit major portfolios that some of our listeners have. But if you have a small portfolio, have a look. It's certainly getting to the stage now where we're not seeing many gold miners on our buy list that we have in the past, or as many that we have in the past. And so if you want to sort of jump on the bandwagon, this might be one of your last chances from a QIV perspective. Anyway, I guess the other point to make is that if you do want to get into gold and you haven't bought the ones that were on our buy list in the past, you may still want to have a look at their quality. It's generally just the gold price which is stopping them from being on our buy list from a prop CAF point of view. But, you know, if you wanted to participate in the sort of one area of the share market which is going up at the moment, you can still look at some of those companies like Northern Star and Evolution, which have dropped off our buy list but still have good quality scores, and their share and sentiment's still very strong for them. But that's Tribune. What's a Tribune, Cam? Is it a Roman soldier of some kind? You're the history expert.
A tribune was a representative of, could be the army, could be the people, quite often the tribune of the plebs. So you would have elections for the person that was going to be your representative to the Senate or to whatever the body was. Yeah, there'd be a tribune out it could be in the army, they could be to the Senate. And it was a protected role. So you basically were allowed to present the opinion of the body that you represented, and you couldn't be killed, supposedly, in theory, for it. You were a protected species. Of course, a lot of them got killed, but,
Yeah.
in theory, they were supposedly, the voice of a body.
I know obvious reason why you named a gold mining company after a tribune.
Yeah, hopefully it is the voice of the shareholders. I don't know why.
I don't know. Just like there's there's no reason why you wouldn't call your gold mining company Tribune Resources. I just thought there might have been some kind of link to gold somehow, but it doesn't sound like it.
Unless there's another definition of the word that has got nothing to do with ancient Rome. But
oftentimes you'd see newspapers were called the Tribune as well. You know, various functions.
Yeah, the voice. In America, it's the voice of the people.
The voice. Yeah. Yeah. Right.
Well, speaking of tribunes, so we've got sort of not a question really, a suggestion maybe from Trent.
Mm-hmm.
He says, prior to buying a stock, I like to do some research to make sure I understand the basics of the company and have not missed anything major. Wondering if you talk through how you get the best out of your interactions. He's talking about AI here, I think. Here is an example prompt that I used on Fleetwood and then Indiana Resources, keen for you to pull apart and break down the best way to write a prompt that I can use time and time again as a check prior to hitting buy. Here's the prompt that he gave to ChatGPT. I am looking at investing in Fleetwood listed on the ASX. Before doing so, can you provide me an overview to make sure I haven't missed anything important? Please consider external environment and impact on the industry it operates in. Also to think about is governance issues, board changes, director selling, key management changes, legal issues, mergers or acquisitions, one-off windfalls that may have boosted historic financials. Happy for you to save questions for a time that Tony is busy and you are co-hosting with his AI clone, which I am this week. So I thought I'd, I shouldn't have said that. Damn it. Anyway, just pretend I didn't say that. So I actually took...
I wonder why I was on mute.
I took his prompt and threw it into the latest model of ChatGPT, or one of the latest models, the O3 model, the reasoning model. And for Tribune Resources, while you were doing your pulled pork, to see what it came up with. I thought I'd read it out. And I think it's a great idea and not something that I have done, Trent, because as a confirmed QAVer, I don't really care what the company's doing. I just listen to the numbers and buy what the spreadsheet tells me to buy. But I do think it's a great idea and something I'm going to think about integrating into my process. But anyway, here's what it has to say. Core asset, what you need to know. 36.75% stake in the East Kundana JV. Rubicon, well, there you go, another Rome reference. Rubicon, Hornet, Pegasus Underground plus Raleigh Restart. Attributable production Q4 24 equals 4 KOZ Aussie at 3.4 G/T cash inflow 20 million. I don't understand any of that, but that's what it thinks I should know. And then it's got a column that says, so what? Small, high-grade underground operation, cash generative, but single asset exposure. Then under theme, it's got growth pipeline, and it talks about Hornet open pit slated to kick off FY25. Under so what? No near-term volume kicker, exploration, CapEx, optionality only. Talks about capital moves, new on-market buyback, management signalling cheap stock, also a tidy way to tighten Billis family control. External setting, gold just punched fresh all-time highs, margin tailwind for all producers, but cost inflation, diesel labour still nibbling in WA. Governance red flags. 2018 takeovers panel found MD Anton Billis failed to disclose greater than 60% effective control. Unacceptable circumstances, board unchanged for decades, only one nominally independent. Control is tight, transparency historically poor, don't expect shareholder-friendly behaviour in a fight. Has some stuff on director trading, recent activity benign, no panic selling, but strike price on options sits well above spot. Financial quirks, FY24 EPS bounced to 8.7 cents versus 1 cent FY23, chiefly on right back of EKJV rehabilitation estimate and tax credit. Normalised earnings closer to FY22, FY23 run rate, don't anchor on FY24 headline. It's got some other stuff as well. Industry M&A drumbeat. Lawyers flag more gold sector consolidation in 2025 as costs bite smaller players. EKJV partner evolution could be a logical aggregator. TBR's tight register makes any bid tricky. Quick take. What's working? Record bullion price and a lean, ungeared balance sheet, a cushioning cost creep. Buyback adds a floor. What's not? Single asset dependence, glacial project pipeline, and a governance history that would make a company secretary blush. What could surprise? A higher grade shoot at Hornet open pit or a restart of full-scale Raleigh could juice ounces quickly. Conversely, another seismic event or paste fill issue underground would hit production hard. Any renewed ASIC or takeovers panel scrutiny of the Billis complex could spook the multiple. Bottom line, TBR is effectively a family-controlled small-cap WA gold play riding a stellar gold price. If you can live with concentrated geology and concentrated governance power, the cash yield plus buyback has appeal. Just don't price it like a growth story and read every Appendix 5B footnote. So what do you think of all of that, Tony?
I thought that was a good summary, particularly the last bit. Yeah. It's a good idea, Trent. I'd probably add a couple of things, or he might want to consider adding a couple of things to his prompt. I don't know if ChatGPT could tell you if there was a qualified order, but that might be
I've been trying.
Possible these days.
Yeah.
Yeah, okay. Well, but certainly there are other red flags, like if there's been director or CFO resignations, that would be something I'd prompt for.
Yeah.
And potential broker coverage. So it wouldn't be the case with Tribune. I don't think there's many brokers covering it, but if it was a large cap company, Trent, it might be worthwhile reading whatever, some of the brokers have to say about it, because they would have done a deep dive on a lot of these questions and might have a more nuanced take on the company and what's going on in the industry than we can see from just reading the releases. So yeah, that'd be the couple of things I'd add to the prompt, but it sounded good.
So
Good idea.
GPT says it thought for 1 minute 56 seconds in preparing its response, did 13 searches across 46 sources, and it links all of the sources here, and I'm just scrolling through them. So there's List Corp, Intelligent Investor, the ABC, Share Cafe, Reuters, Takeovers Panel, a repeat of lots of those, hetherington.net.au, whatever that is. Australian Resources and Investment website, but no annual reports, which is what it would need to go to find
Right.
audits and stuff like that. So for some reason, it doesn't go, no mention of the company's own website, no mention of annual reports or any of that kind of stuff, which I'm not sure why it doesn't go there straight up and start looking for stuff. But yeah,
You can't put that in the prompt. Go to the company's website and look at the annual report.
could do that. Might try that. Yeah. But it's a good idea, Trent,
Okay.
that I haven't really built into my process. And I'm going to think about how to do that, particularly looking for red flags, like our governance red flags, like particularly to get it to look for, as you said, sudden resignations or other sorts of governance issues, to highlight those when I run the list every week. It's a good idea. So thank you, Trent. Good thinking.
And pending takeovers as well. Make sure it's the company's not in a takeover situation, I guess, before you buy it.
Yeah, good stuff. And people may note, with the buy list I put out today, I have integrated the notes section into the buy list. So for things like RMS and HLI, the governance red flags, it now shows in the middle of the buy list, so I don't miss things like RMS in the future. By the way, RMS went up 10% after I bought it, so
I know, I saw that.
You can take your governance red flag and stick it up your backside. But I did sell it after the show last week. I was like, I'm going to take the 10%, but I'm going to get out as well. So yeah, we'll see what happens. But I was glad I could make a mistake and still get out of it at a profit.
Yeah.
I'm not going to look that gift horse in the mouth, Anywho,
Yeah, exactly.
yeah, that's good. Good stuff, Trent. Well, I think that's it, Tony.
Mhm.
I got 5 minutes to talk about after hours, and I got to go. What do you got for me this week?
Have you seen Tulsa King?
Is that the Stallone thing?
It is, yes.
No, I haven't.
Jenny and I watched the second season over Easter and loved it.
Really? It's good?
Yeah.
What's the
very,
setup?
Very light. In season 1, Stallone has been in jail for 20-odd years, kept his mouth shut, put there to protect the mob boss, gets out, times have changed, and the son's kind of taking over from the father and sends him to Tulsa rather than give him his just rewards for keeping his mouth shut and doing time for the family. And then Stallone, kind of starts from scratch and hustles his way to creating an empire in Tulsa in the middle of nowhere, taking over a weed shop and weed factory and a casino, et cetera, et cetera. And it's all very good-natured and lots of charm. So it's pretty light, but it's good fun. Have you ever seen Lilyhammer? It's a bit in the style of Lilyhammer.
I watched a couple of episodes. Little Stevie. Fans
Yeah.
there?
Yeah. Similar sort of thing.
Yeah.
Banished to the regions, but then uses all your sort of skills to create something from nothing.
Yeah. Good stuff. Well, we've been watching White Lotus and Righteous Gemstones. We haven't watched much TV this week, but with the little bit that we have, watching those. Been wanting to start Black Mirror, but haven't had a chance to get into that yet. But enjoying White Lotus, enjoying mostly Walton Goggins in that. Yeah.
Mm-hmm. I can't get into it. I've tried a number of times and can't get past the first episode of White Lotus. It just,
Right.
I find it boring, and B, it's just too Kardashian for me. Just
what's too Kardashian? I mean,
girls on the beach sipping cocktails, bitching to each other. It's just okay. I don't need it.
Okay.
Mm.
One interesting thing I've been doing the last few days is having conversations with ChatGPT about things like the history of the World Trade Organization and Trump and tariffs and all of that kind of stuff, trying to get my head around different things. And then I will take its answers to me and then put them into DeepSeek, Gemini, which is Google's latest state-of-the-art model, and Grok, and say, what do you think of this? DeepSeek usually will basically agree with ChatGPT. It was trained on ChatGPT, so that's no big surprise. Gemini will mostly agree with it as well. Grok takes a big issue, particularly if ChatGPT says anything critical about the United States and its role in the WTO, or Trump, or Elon, or any of that kind of stuff. And so then I'll take Grok's answer and I'll put it back into GPT and say, what do you think about Grok's response? GPT will go, well, Grok would say that, wouldn't he? And then it eviscerates that response. And then I take that and give it back to Grok. And then Grok takes issue with that. And then I bounce them backwards and forwards. What is quite clear to me is that Grok has a very pro-US bias.
Mm-hmm.
A pro-Trump bias, a pro-US bias, not in a way that it's, over the top, but it's always trying to provide justifications for Trump's behavior or the Trump-chump behavior or the US's behavior in the WTO. It's almost like you're talking to somebody like our friend David Markham. It's always like, well, you have to understand, like the US, if it does something bad, it wasn't deliberate as part of its role as a global hegemon. It was a miscalculation, or they thought something would happen and something else happened. So then they had to tear it all up and burn it down and start again, kind of thing. So I was asking ChatGPT, like, why do Grok's responses just seem so heavily biased towards the US, trying to figure that out? Elon says that he built Grok to be neutral, so it wasn't woke. It wasn't a woke AI. It would be the neutral, but it's evidently not.
Mm.
And I've been trying to work out how you would even build an AI to have that level of bias in it. And, I think it's partly the training set, which would be a lot of X, a lot of Twitter. That's the other thing about Grok is every paragraph it says, according to people on X, blah, 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 blah. And, the feeling on X is, and I keep going, I don't give a shit about X. Stop telling me about X. I don't want to hear about X. I don't care. He goes, oh, okay, I'll stop doing that. But then it does it again. But it's also the reinforcement learning component. So, after you get it to read everything, then you ask it questions. And when it answers questions, you score its answers as good or not good based on how it answers. That's the reinforcement learning part of the training model. And then it learns to adjust its algorithm to give you the answers that score better. I think the reinforcement learning framework for it was heavily biased towards a certain view of the US and its geopolitical role in the world. But it's just an interesting interesting early example of AIs and their biases and bouncing them off each other to get a feel. I'm not saying that ChatGPT probably doesn't have its own guardrails and biases as well, but to get a sense for where they sit in the quadrant, and having them debate each other basically is a lot of fun. That's my shits and giggles for this week.
Well, I'm glad you're doing it rather than me.
Why? It's fascinating. It's like having two really smart people having a debate in front of you. And you go, well, hold on, he says this. And the other one goes, no. Well, you got to understand this context. And you go, well, okay, well, what do you think about that? How do you respond? You don't like that? I thought you'd love that. Intelligent debates between smart people.
I do love it.
But you'd rather watch golf.
I do love intelligent debate. I'm not sure. Yeah, I'm not sure I'm getting it by taking ChatGPT's output and putting it into Grok. But, I mean, it's just, Elon Musk came out and said Grok was going to be biased. Didn't want it to be woke. Wanted it to be the antidote of ChatGPT. So
I don't think having
what kind of usage does it have compared to ChatGPT?
Well, I don't think anything is as big as that, but they've built it into X, so I guess it's probably getting quite a bit of usage of that. The rumor this week is that OpenAI are going to launch their own social network now to compete with Facebook and X, because there's just so much data being generated that you can train an AI on in the social networks. They've run out of data to train them on, apart from more and more video, but Elon's got all of the video that the Teslas grab as they drive around.
Yep.
And all of the X stuff, and Meta has all of their stuff. So OpenAI needs its own social network data set now. So that will be interesting. That'll have an interesting impact on some Mag 7 share prices if OpenAI launch that. Because they've got, I saw Sam on stage at a conference in the last week or so. It was a TED, actually. Chris Anderson was interviewing him. And they asked him how many users they have, active users, and he said 500 million. And Chris said, you told me backstage that it's doubled in the last 3 weeks. And he said, yeah, that was private. Oh, you weren't supposed to say that publicly. So it's more like probably 1 billion active users they have on ChatGPT right now, which is insane for a company that didn't exist, well, publicly, had no profile 2 years ago, right? It's the fastest growing product adoption in human history.
Interesting to see if A, they can make money out of it, and B, what a social network looks like. Do we need another social network? Yeah, is it going to work? Anyway.
Yeah, we do. We do, because the ones we got suck. They're horrible. All right, I got to go. Thank you, TK.
Okay. Yep.
Have a good week, everyone.
Bye.